Hi guys, welcome to the Savvy Money Show. Me, your host Sean. We're gonna talk about FAANG stocks for the future. Obviously not the current FAANG stocks, but the stocks that will make the next FAANG. I've done a video on this before, but we're gonna talk about another set of stocks that can make it. Now, I want to speak about something else. A question I keep getting asked is, why do I have so many portfolios? Well, I have my Trading 212 ISA because I consider Trading 212 still the best commission-free platform out there. It doesn't charge me for the ISA, and that's why I have my ISA there. Although it has made a few mistakes, it's still the best platform. I have my invest account with them. I also have my free trade, and I have my stake account. They're my free commission-free platforms. Then I have Hargreaves Lansdowne. I have a couple of other accounts. Basically, I look, if I can't find a ticker symbol in Trading 212, I look at stake and free trade, and I can usually find it there. If I can't, I then look at Hargreaves Lansdowne or one of my other portfolios. The other reason is that people keep saying they're looking to build their portfolio to $1 million or £1 million by the time they're a certain age, whatever. You've got to realise these platforms are only insured up to 85,000. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Savvy Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. If these platforms are only insured up to 85,000, why would you hold $1 million in there? I'm steadily growing my portfolios in these accounts, and month on month, like I'm sure you all are. But again, why would you risk one of these platforms going under and you being left out of pocket by only having one platform? Of course, there is the added bonus that the free platforms give you a free share for signing up. Hence, the links in the description below if you're looking for one of those links for the free share. But my main concern is if I grow past that 85,000 and the platform goes under. Anyway, let's get on with the show, shall we? Oh, sorry about that, that's for penny stock video I was looking at. Now, next generation FAANG stocks, starting with CRISPR therapeutics. Why CRISPR? Well, it's to do with genetic sequencing, and I think it has a bright future. And this one has good financials. It's a fairly good company, and I couldn't see it doing well. If you look at the financials, the liabilities are 127 million total, and current assets at 987 million. So it well covers it with the current assets. Total assets were over $1 billion. Now, the cash flow at the end of the period is 951 million. So you can easily pay off the liabilities. Now, I have recently done videos about Illumina and Invitae, and I do think these are good companies to own. However, I do think this is one of those 5-10 years down the line, because it has the good financials, it will be there. If I had to choose two, it would be this and Illumina from the gene sequencing. Anyway, let's get on. Now, company number 2, Stitch Fix. Spoke about this when it was $15 a share, and I've done more looking into it, and the more I look into it, the better it appears. Now, when you do look into it, this is from the Motley Fool, and it's supposed to trying to disrupt apparel retailing through a subscription selling approach. It relies on technologies such as machine learning, and that's what I like, is the software side of it. The potential growth in the industry has to demonstrate it can thrive through current conditions, but it's got something here with it, because it's gained more than 500,000 active clients in the 6 months ending on February 1st, equating a 17% growth year over year. Shoppers number 3.5 million and are highly engaged in the service. Revenue per client rose 8% in the second quarter fiscal year, and Stitch Fix notched some market share wins while pushing deeper into menswear. Now, it's not staying still with its algorithm, it keeps on adjusting it to go with what's going on in the market. Now, I think this will be a good play. Remember, these are ones for the next 5 to 10 years, because that's what we're looking for. We were looking to pick up ones that we can hold for 5 to 10 years. If we look at balance sheet again, you see the total liability is 359 million. Current assets 458 million and change. Now it has over 96 million cash in hand. Now, I just think it's a good company to look at. Now, the next one is Pluralsight. The online learning boom should help them, but they have more to them than just that. And again, if we look at their financial statement, we will see that the total liabilities is 850.7, and oh sorry, don't know how you guys can stay awake watching me. I'm putting myself to sleep. Their total assets is over $1 billion, so they can cover their liabilities, and the cash at the end of the period is over 109 million. So again, this is one that I think we should be looking out for. Now, the next one is Fastly, and I'm going to put it, I think Fastly is one of these companies that are undervalued. I think they had a good earnings. They mentioned TikTok was one of their biggest customers with 12% of their revenue, and people suddenly sold off. Now, people don't seem to realise that they have a huge retention rate. They are signing up customers left, right and centre. When Microsoft took over a company before, that was one of Fastly's customers, because people were saying Microsoft do what Fastly do. Yes, but not quite the same way. So they didn't tell them to move from Fastly to Microsoft service, so that they don't always interfere in that way. So it seems that within the next 48 hours Microsoft is going to be taking over TikTok. So people thought if TikTok get banned, Fastly lose the revenue. If Microsoft take over TikTok, Fastly lose the revenue. Now, we've seen Fastly jump up today. That is because it looks like the deal is going to go ahead. That means there's more chance that TikTok will stay with them. Now, if that does, I think it could be $150 share. Anyway, the liabilities total is 65.5 million. Current assets $500 million. Now, and where there is service and support section, they don't have that many overheads. Cash at end of the period 327 million. Now, I know a lot of people thought I was going to put in Tesla, but I think Tesla is one of those that's a foregone conclusion in people's minds. I'm trying to put in stocks that people are not thinking about. I do still think companies like Illumina, C Limited and Melee, who have all doubled. In the case of Melee, tripled since I first did a video about them. Illumina, of course, hasn't doubled. it just went up $80. Now, I do still think that they will grow so much in the next 10 years. However, these are my picks because I'm trying to do picks that people will not usually put in, not the usual picks, and I don't want to be classed as jumping on the bandwagon. But my next one would have been C Limited, purely because it has thrived through all this. I'm not going to go for Neo, one which I have been, I've been bullish on throughout all this, or Workhorse or SHOL, purely because the finances are not there yet, and there are plenty of things that could go wrong. However, I do still think those companies will have a bright future. Anyway, don't forget to leave a comment in the box below. Don't forget to hit the like button, it really does help with the YouTube algorithm and getting the video out to more people. And I'll see you in the next video. Stay safe, stay savvy, stay investing. Goodbye.